Welcome to the Smart Money Simplified podcast with your host, Brent Mekosh. Brent, you have something on the table you want to discuss today that doesn't get talked about a lot. And it's ironic because as I was coming up as a business and financial news reporter, it got talked about all of the time.
Sure.
So,
Yeah. Yeah. And I'm really excited about today's conversation because we're going to deal with probably one of my most conflicted asset classes. We're going to talk about precious metals, gold,
mm,
silver, and everything associated with those markets. And here's why it's conflicted for me. As those of you that have known me for a long time and have read my book, Shameless Plug, that's up on Amazon. I was downtown for 9/11, and that was such a seismic event in my life that it really got me thinking about when things can really unravel and go wrong. And so I did, I'm a history buff, and I did these deep dives into history after 9/11 had occurred. And what I found was, particularly around gold, when you had people fleeing Russia when during the revolution, or they were fleeing Vietnam, obviously after we pulled out of that country as well, those that had something to start with in many cases had gold or silver coins sewn into their clothing. And it just got me thinking differently about the metals and what it represents. And I think it's a really timely discussion to have right now because we've seen a really incredible performance. We've seen a breakout in gold, a breakout in silver, which I'm sure we're going to talk a lot about today. A lot of talks about what central banks are doing around the world. I think it was maybe 4 or 5 years ago, and our guest Peter Thomas, who I'll introduce in a second, can probably tell us more about that. But gold recently was I guess renewed as a tier one reserve asset where it was not for a long time, and you're seeing appetite around the world from central banks that are buying the metals. And I think it's a timely discussion. I think it's one that's definitely worth having. I think it's one that in my business, the vast majority of financial advisors have little, if not, or no exposure to the metals, whether physical gold or silver or the ETFs that trade out there. And I think it's a topic I want to be educated more about today, and I think I got the guy to do it. We have Pete Thomas. He is a gold expert, and I think that's a fair assessment, because given what his history in these markets have been. So, Pete, thank you so much for joining me. And how would you like to introduce yourself and share a little bit of your background and experience in this world?
Well, first off, it's a pleasure to be here. Thank you for having me on. And my background is I was pretty much born to be a broker. My dad was on the floor in the gold pit for almost 40 years. And when I was a little kid, like 11, 12, 13, I was first baseman, and he would take my first baseman's mitt, put it on top of the refrigerator, and then he would lay out on the top of the dryer, because it had curved edges on it, put some stick-up tape on each side, and I would have to do his point and figure for the next day.
I love it.
I was 12, 13. And then when I got a little older, I would look and go, "Hey, Dad, did that market open a little higher than that today?" And he'd just smile at me. He goes, "Oh, now you're starting to get it," And I did that for a long time. And then when I was, I think, 14, I was getting ready to go off to military school in a few months. It was my birthday, and I'm laying in the bed. I'm sleeping. Like, "Hey, I'm gonna sleep late. Great day." He comes in, he hits me on the foot. He goes, "What are you doing?" He goes, "You're like 13." He goes, "It's time to get a job. Get your ass out of bed." And I go, "Excuse me? What do you mean it's time to get a job? You're 13. It's time to get a job." And I went down and became a runner. And myself and my sister were both working on the Florida Exchange when we were kids, running orders in. And then eventually I moved over on summer breaks from military school. I was on the phones as a phone clerk. And then later on, I was asked to join the exchange and started filling orders. And I met this gentleman by the name of Bunker Hunt through a rather interesting way, in that I was filling orders in the back months for Tommy Sullivan at the time, and got a spread, buy and sell on the same ticket. Probably the biggest order that has mistakes in it is that one, right? And it came in and it was inverted, and he would have lost a fortune if I had filled it, right? And my phone clerk, this great Irish kid who was on the roster for the Cubs in their Bush League, and he was working his way up to the pros, and he was a catcher, and I'd let him leave for games, and because I just loved him, and lots of muscles and freckles and just a great all around kid. And I would have buried him if he'd taken the order wrong, you know. So I gave him the chop sign, you know, I'm coming out, I'm going dead for a minute, right? I look at my deck, it was kind of quiet, and I ran over, I said, give me the phone, give me this order. And this gentleman gets on the phone with this heavy Southern accent. I said, sir, we got 2 ways to go with this. I can bury you and make some very good friends, or I think we better fix this. And he goes, you fix it. And I fixed the order, filled it. And then later on at the end of the day, my clerk comes and grabs me and he goes, this guy wants to talk to you that you did the order for. And I said, oh, okay, fine. Take the phone. And he goes, what's your name? I said, I'm some Pete Thomas. He goes, who are you filling orders for? I said, I'm filling orders for everybody. I'm an independent. And he goes, I want you to fill for me. And I go, who are you? You know, oh, you want me to leave the fill for you? He goes, yeah. He says, I'm Nelson Bunker Hunt. And he says, I'm going to be acquiring a lot of silver. And we were at $4.80. And
So we're talking Hunt as the Hunt brothers when they squeezed
the Hunt brothers, yeah.
Oh, geez,
and
yeah.
so
we could do a podcast just on that.
I
Oh
didn't
my
know I didn't know who he was. You know, I just knew he had an order. It was way too big and it was backwards. And so I said, listen, I said, we're going to set you up so it's a DRT order, which is directed by the broker. In other words, if I see it's right or wrong, or if the market's real thin when it comes in, I can hold back and get him better fills. And so he put me on as a DRT filling broker for him, and his orders would come in that way. And we took silver from $4 to $50. I was the first guy to sell an order on the floor at $50 in silver. And it was an interesting experience because the whole pit went dead quiet. They heard sell 5 at 50. I remember it real clearly. They went, it was just like everybody got hit by a bus, you know. They were all just like, oh my God, you know, we're at $50.
Who took that offer? Do you remember?
I met the guy who was on the other side of the order about 10 years ago. He goes, you're that guy that told me that. I said, yeah, I am.
Oh, jeez.
And he was an English guy and a very nice guy. I met him in Dubai at a lecture I was doing. So it was fun.
So sometime that was springtime 1980, I'm guessing, right?
Yeah, it was a while ago.
Yeah.
Yeah.
As for our listeners, I have used that Hunt Brothers example when the GameStop thing was going crazy a couple years back, where you had Warren Kitty and the meme stocks. I said, you know, because we never gotten, it's not the kind of portfolios we manage, but I would get questions about that. And I said, you will have the institutions will do something to defend themselves, which they did, because they absolutely did, to close out that Hunt Brothers position. And just for reference of our listeners, you want to talk a little bit about what happened with the Hunt Brothers and how that trade ended?
Oh, it was I was standing on the on top step, and a guy by the name of Myron Potter. He was Heinhold's margin clerk. He was like the Reaper. If you saw him, you knew you were dead. You know, you just didn't want to see Myron, you know. And there he was standing on the edge of the pit, and he's looking at me and he goes, and I go, oh no, you know, what's going on? I'm in trouble now. I walk over and he says to me, I know your positions. He sees, you know, he's a margin clerk. He sees everybody's positions. He says, you have 8,000 silver on. He says, the government's about to make it illegal to buy silver. I'm like 12 million in the hole, you know, I mean, in an instant, right? So I start laying them off. Boom, 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 you know, as fast as I can. And I went home that night. I remember I looked at my wife and I said, honey, she goes, yeah. I go, you know that new Mercedes I got you? She goes, yeah, I love that car. I go, you're going to love your Toyota. I promise. You know, it was not a pleasant day, you know, but I got out alive and we didn't lose our home. And, you know, some people did. Some people suffered horribly from that break. And it was, you know, I mean, somehow they managed to get the government to make it illegal to own silver. And that was the end of it. We just straight down, you know.
Well, it was opening long positions, I think, because what the Hunt Brothers have figured out, to listeners that have no idea what we're talking about, is that they could purchase more of the futures on silver than could actually be delivered. So they squeezed the market, which is how they could get it from $4.50 up to $50. And as I said, the institutions, the system will come in and defend itself. And it was either the entire exchange, the clearinghouse goes solvent, or they change the rules of the game,
That's
and which is what they
exactly
did.
right.
You know,
Which recently happened, if you recall. One of my dear friends went to the LME to be a chairman there. That's what happened in nickel just recently.
that was in London, right? Was that the
Yeah, in
London deal?
London. They went,
Yeah,
guys came in and said, "Hey, we want delivery." And they went, "No, we don't have it. Sorry." And they
yeah.
went,
Too
"Excuse
bad.
me? Wait a minute, you're the exchange. What do you mean you don't have it?" So
Yeah.
it's happened a couple of times in history. But we stood for delivery at 7, 8, 9, 13, 15. And we would just, how many you got? We'll take them all.
Yeah.
No, we want, and the guys that were trading hypothetical money, printed paper, they just thought, "Oh, sure, this idiot's in spot. I'll just bury him here," right? Because nobody's going to take delivery at 13. We were like, we just moved, I get on the phone, I say, "Bunker, send me 300 million. Say, "You got it." We just, boom, we take them, have them move through our storage space, and that'd be it. We just keep right on going. And we only knew one side of the card, that was the blue side, and we were buying all the time. Any dips, it was ours, and right, it could happen again. I mean, this market is ready to have that happen again because of getting to your point in the opening, which is very important. The central banks are now going to harder assets and have realized that gold is an asset again. It only goes back for payment series to Tutankhamun, who I was just at the pyramids recently. A friend of mine opened a large refinery in Cairo, and I went and visited for the opening. And so let's just say for the last 7,000 years, gold has been a method of payment. So that's not a bad track record.
Oh, no question about that. And I think that, it's a good segue into our conversation today because you look at 1980, obviously gold topped out, I think about $800 an ounce, I think it was. Silver was $50 an ounce. Then you went into this 20-year bear market in the metals where you had silver probably down to 5 or 6 again by 2000, 2001, gold down around 250, 260. And then you saw some signs of life. And now we're at 2,300, $2,400 for gold.
$2,300, let's say.
Yeah, $29 as we're recording this, maybe 30 for silver, but it's on the radar again. And we've broken out of some, I think, technically anyway. You started your career looking at charts for your dad, and I think that they're representative of they may not predict the future, but they do tell you what's happened in the past. And we're at a whole new pattern, I think, in terms of what's happening in the metals. And so, what would you say is driving this? And are we beginning, middle, end point of this frothy market, or like what do you see coming in the future? And what are the macros behind it?
Well, I mean, let's start with if we're gonna go macro, we'll get the big paintbrush out here, and the first thing we're gonna do is go to consumption by large banks, and the unusual part of this. I mean, we see China. I can't remember. I think China took 170 metric tons recently, and nobody's putting the brakes up. I mean, I'm seeing bids from like Uzbekistan and Uzbekistan, and all the states are coming in buying. When you compare their economy, as small as it might be, to them buying a ton of gold or 2 tons of gold to put in their bank to back their asset that they're printing. It's very unusual. We've never seen this before. We've never seen the smaller players coming in and just gobbling up whatever's out there. And premiums, for example, for our viewers, a premium is what you pay over spot. Spot is the posted price for a metal, and that's what comes out twice in London a day, and that's what gold is worth at that point. And then the premium is what the dealers put on it for the creation of it and storage and all the other things that are involved. There's 8 steps actually. And I'm seeing premiums like I've never seen before of 10, sometimes 10%, 3%, 7% in Singapore. Cambodia was a big buyer the other day. I saw Vietnam buying some metal. So we're seeing new players, and it's real unusual because that's a lot of energy, a lot of money coming into the market. And in order to get a market up and hold it, it takes consistent buying and not in small size. And it's just coming in from all over.
So it sounds like the people on the buy side of this thing are a lot of developing economies. Who's the other side of that trade?
Well, the other side of that trade is, in this case, we're seeing, for example, a friend of mine who runs a giant refinery in Dubai, they're getting gold out of Africa like they've never seen before. I mean, just massive quantities. And be at 2,300, I mean, people are, they're bringing their gold in. And same with Central America and South America. We're seeing, in the old days, they would go down there and, oh, we'll give you $1,000 for that dirty metal, and they would like, now they pick out their phone, they go, wait a minute, spot's at 2,200. What are you talking about? I'm selling for 2,200. And everyone is involved in it, and in Central South America. And we're just seeing a deluge of assets coming in, and everything that's coming up for delivery is being taken. So I hope that answers your question. And I think the question is best answered by, as the value goes up, more is brought in, and it has not slowed down.
Now, what about developed economies, say Europe, Japan, United
Ah,
States, Canada, Australia? Are they around, central banks around at all? Or are they kind of
oh,
out of this thing so far?
Japan is for the first time a big player. I used to I got to be careful. I got a stack of NDAs over here, so you got to excuse me. But Japan, I can tell you, I used to sell a lot of platinum and palladium to the auto manufacturers for their catalytic converters, and we did that for a long time. But we never saw them buying gold. Now they're in buying gold, and they're not slowing down. I had an a request for a large amount of gold, and I called a friend of mine in Saudi Arabia who purchased a lot of gold for me over the past 20 years. And I said, hey, I need X amount of gold. I know you're sitting on it, and I'd love to have some. Could you do this for me and ship it to Switzerland for me? And I'll give you all the numbers. And he said, sell gold? He goes, we only buy gold. I mean, it was like a completely foreign concept to him. So we're seeing nations, and especially in the EU, buying quantities of gold, and they're not coming to the market selling it at all. They're just hanging on to it. So I think the attitude, which is important for us to look at, the attitude of the central bank directors is, we want to own hard assets, and we're not thinking about selling them. And even to give you an example of that, Germany came to the Fed and went, we want all our gold back. You're holding all of our gold, for our transactions. We don't want you holding it anymore. We want you to ship it to us. And they went, all of it? And they went, all of it. And that's happened 2 or 3 times very recently, where we've had nations that are holding assets here going, send them back. We want them in our central bank. So it doesn't seem to be slowing down, and the players are of a very large size.
Well, I think that if you look at what at least the financial and the global economic landscape has been, say, post World War II. We go to Bretton Woods, the dollar is king, and I think it was pegged at 35 an ounce, if I'm right about that. Is that
You're right.
perhaps?
We're right on the head. Yeah.
And 73, 72, 73, I don't know exactly the year, but Nixon, obviously, we're running deficits to fund the Vietnam War. You get other countries saying, great, here are dollars, give me gold in return for that. That was the
Right.
deal. That was the deal in Bretton Woods. And Nixon says, no, we're going to close the gold window. And all of a sudden you get, this run up in the metals directly related to that, because now this metal's floating. I think what I'm most curious and concerned about is, if you ask me what keeps me up at night, it's not what the stock market does, and that's a big part of our world.
Sure it is.
It's kind of what the bond market's doing, particularly in the longer end of the curve. But more than that, it is what the federal government is doing. Because we're in a world right now, at least as it stands today, the dollar is the reserve currency. So it's how trade occurs throughout most of the world, not exclusively. But the treasury is the store of value, around the world. And when I hear that all of a sudden you start to see central banks, particularly in the developing world, that are out there accumulating gold, they might be thinking to themselves, wait a second, before I could hold these treasuries, I could earn, now, 4.5%, 5%, depending on how far out in the curve they go. And I don't want to do that anymore. I want to earn nothing and hold a metal. And that's because I think that they're looking at the future being perhaps far more pessimistic for the federal government's ability to pay their debts than perhaps most people are realizing. Is that, are they dots that should be connected, or am I completely out to lunch with that?
Well, no, you're not, and I think let's expand that. All right, let's blow that out a little bit, because we now have Brexit, and I think we should touch on that. All right, we have a multiplicity of nations joining Brexit, and one of the primary pay systems within the Brexit regime is acceptance of gold. They're set up to, if Russia ships X amount of gold to Venezuela, Venezuela can put its deposits of gold in and pay for its oil. And that's the first time that's ever happened. And we're really seeing a lot of people step into that. And to go one step further, last week, Saudi Arabia, I believe, depegged from the dollar. Is that correct?
That is correct. Yeah. And for
So,
people, yeah.
yeah. So we've got a lot of balls in the air that we're juggling here. Brexit is coming in, and now I attended a lecture this morning about a new system that they're discussing for Brexit off the SWIFT system, their own system, which is blockchain backed and will carry over and will be used for the transfers of money. And all transfers they're guaranteeing will be done in less than less than 1 day, and it'll be ready to go. And the professor who was discussing it was fascinating. And this whole picture is changing now. The whole world is changing, and gold is a big part of it.
Yeah, we can timestamp this on my YouTube channel when the Ukraine-Russia war broke out, because I think this is a big part of all this.
Oh,
Um,
absolutely.
before we actually kicked Russia out of SWIFT, I put up a YouTube on video, or video on YouTube rather, it's still up there, and I said, if we do this, which of course we did, this is a really colossal mistake, because you do not, if you have the privilege of owning the world's reserve currency, you never under any circumstances weaponize it.
Yep.
Because you don't ever want the users of that currency to feel like the State Department on a whim could all of a sudden either freeze your assets, lock them up, kick you out of a system, have that much control over how you're spending your own money. And it's not being, for Russia, against Russia, for Ukraine, against Ukraine. It's just a reality. And of course, I thought better, cooler heads would prevail, and they would not do that. But of course they did. And if I am out there across the world, I'm looking to myself, all right, well, how do I protect myself? And how do I maybe decouple myself from being so dependent on the US dollar? And the danger for those of us who are in the United States is there is trillions and trillions and trillions and trillions of dollars sitting in banks and central banks around the entire world. And
73 trillion supposedly is the number. I don't
I
know
didn't
how
know the number. So, what happens if that money comes home?
Oh,
I mean,
well,
that's we're talking like, there's a lot of things. An asteroid, sometimes clients will come to me with whatever the horror show scenarios of the day, and I'm like, yes, an asteroid could also come and knock the entire
right.
planet off its axis too. But that's it can't happen overnight, I don't believe, because the systems are so entrenched and in place for the dollar to be the tradable currency. But there's cracks in that, and that's a lot of dollars, and we don't want them coming home, because if they do come home, you think you've seen inflation at 9% in the middle of 2022.
Right.
4 or 5%, whatever they say the number is now, it's a bigger number if all those dollars come flooding back to the United States.
No, listen, you're 100% right. I mean, I used to have on my wall a a 2-part frame. There was a picture frame with a Deutschmark in it, and it had 10 Deutschmark on it, right?
Right.
And when you flip the picture over, I had the same bill, but on the back of it was printed 100 Deutschmark. The inflation was so high and so fast that by the time the money got off the printing press, they just flipped it over and put a 0 on it and ran it down again. And that was at the end of World War II. And they were using Deutschmarks. They're bringing them in wheelbarrows to use for firing the ovens to make bread. So do major currencies collapse? Absolutely. Do they? And if I can remember it happening and have pictures of it and own one, it can happen at any time. And I got in a I occasionally I have the privilege to lecture at Cambridge, and I was speaking with a professor the other day, and I said to him, I go, what's the next big trick that I look at Putin as the master chess player that he is. I go, what's the next big thing that Putin's going to do? And he said he's going to get his money confiscated in America. He's making some moves. And I said, that's hysterical. We're not that stupid. Come on. And he goes, oh yeah. He goes, everything's in place. You watch. And the minute as a nation, you go in and confiscate someone's assets, everything goes out the window, because it goes to your point, which is so valid. What happens when people start dabbling in other people's money and start confiscating it? Everybody no longer wants to play with you. And that was a brilliant move on his part. It wasn't an accident. A lot of people feel it was intentional to get him to confiscate these assets so that everybody would look at the U.S. and go, I don't know if I want to keep my assets there anymore, So I wanted to reinforce your point,
Now, I'm guessing, given your background and given your stature in this market, you probably have the ear, I would imagine, as some policymakers. Is anyone else seeing this at all?
I don't know if anyone else at the top is talking about this, but all of us in the gold community now have it as a given. We're, everybody's talking like bricks that'll be happening tomorrow, but then actually it's very interesting in that the people at the top are saying, give us 2 to 3 years. It's going to take us a
they're
while.
unwinding massive dollar and treasury positions themselves.
Exactly right. And ask me how many T-bills Japan's hanging on to right now. Whoa. When they liquidated that was staggering to me. And how much gold does Canada have in its vaults? None. They sold it all. They have no hard assets there, and they're just printing paper. They have nothing to back it. So we're seeing a lot of things going on around the world where people are looking very, very hard at the fiat currencies that they're using and thinking about, maybe we'll go to gold, go to silver. Maybe, we don't see any reason not to. And even base metals, I'm getting, inquiries and, what should I buy? I can't afford gold. What should I do? I go, well, you can get into silver, or, you get in, there's other metals that you can buy right now at lower levels if you want to get into it.
Let's talk about silver, because that's a market I don't truly understand, because you've got
Okay.
both it's unlike gold, where essentially its mine is pulled out of the earth, it's held somewhere, or it's been
Right.
jewelry or whatever it is. Silver it's an industrial commodity as well. So you've got it's a medium of exchange, but it's also an industrial commodity.
Absolutely right.
And so you're seeing this massive, a lot of volatility, and you're also seeing price of silver relative to gold, even at these sort of inflated levels where we're at with silver right now, is still pretty cheap. It's like, the ratio is what, 70-80, something like that.
Well, that's a good ratio. It's a good ratio to use at the moment, right?
What tell me, like, what really we've talked about some of the things that potentially are very bullish for the gold market. Where does silver enter that equation?
Well, let's start with how much we have. All right, that generally will give you a basis for where it can go. We're at a 20-year low, or 20-year deficit in held silver. It's not around, buddy.
So what does that mean? What does that mean when you say that?
Well, when you mine gold and you pour it into 5,000-ounce ingots or 1,000-ounce ingots and put it in the vault, and people like China, who are the #1 consumer right now, Mexico is the #1 producer right now. They're producing at a lower level than they have recently, and the demand is higher around the world, and the silver held against that demand is at an all-time low.
Okay.
Or not all-time low, 20-year low. So what we're seeing is demand. Let's put this in perspective. Demand is up 9% for gold usage, or excuse me, for silver usage in industrial means right now. I'm was just asked recently in an interview. I used to say to people, you should have 5% of your assets in metal. Then maybe 6 months, 8 months ago, I went, we should have 10%. Then when we went through 40,000 in the stock market, I said 10% when the market breaks, and if it breaks and it goes down, all these people on margin are going to have to be eating margin call. They're going to have to be selling everything they got, and they're going to be selling gold and silver too. It will go down along with it, but it won't go down as fast, and it'll find the breaks quicker. But it's my belief now that you should be holding 20% of your assets in hard currency versus in paper. And we're looking at the highest demand we'd ever seen, and it really came out of the green movement, the EV movement. I mean, for example, in cars, we use 15 to maybe 25 pounds of silver, usually maybe, or of copper wire rather. And the demand for copper being, 10 times higher, all of those circuit boards that use silver in those new EV cars are increasing the demand as well. So what we're seeing is a tremendous new player coming into the field, gobbling up silver as fast as it can, along with other assets, and along with copper, along with silver. So it's my opinion, and I will stand by this, that copper, and you mentioned earlier in the show, silver is used in jewelry and things of that nature, and stamping coins and collector stuff. But I'm thinking now that we're going to go inverted for the first time from 50% of bars, bullion, coin, and jewelry. We're going to go to 75% industrial usage. I would say possibly almost by the end of this year, because we're growing so exponentially now with all of the things that silver does as a superconductor. It is tremendous, and its demand is the highest it's ever been. So we could see 75-25% demand, which it means that it has now gone from a precious metal to an industrial metal. And I'll tell you what, I'm seeing guys that are used to buy smaller orders, and they would make wire out of it. They would make it into shot, because shot can be formed into a lot of different things. I buy a lot of shot out of Peru. So now what I'm thinking is that demand from the industrial side, $30 looks like it can hold, and it looks like it's going to hold real well. And then if it gets into speculation, who knows where it can go.
Now, what happens though in term if this electrification trend that we have slows down, or people decide they don't want these things, or the government, we get a new government that comes in and is not subsidizing these to the same extent.
Right.
How much slack is there in that market that if a lot of that demand went away? Because again, silver to me, it's just a completely different animal. What would that do to the price? How sensitive would it be to what the demand side of the equation looks like?
Okay.
Industrial
now,
demand.
Let's flip it. All
Yeah.
right. Let's say, okay, now we no longer have someone throwing $1 trillion into electric car and managing to complete 500 of them. I mean, let's just say they put the brakes on that. Elon Musk, who, very interesting gentleman, and just came out with a statement in which he said he's building something. It's a brand new term. I mean, I believe he coined what's called a gigafactory. And I'm like, okay, what's a gigafactory? He said right now, in his opinion, that IA is going to grow exponentially at a ratio which they won't be able to keep up with. And he's in the process of creating these giant factories. And within these factories, he's going to create as many as 1,000 new computer print boards. And his demand for natural resources is going to be staggering. And let me give you an example of how much he's planning on consuming in these gigafactories for IA.
IA is what?
IA is the computers,
Oh,
the
AI. Got it.
AI, excuse
AI.
me,
Yeah.
AI, and he went to Indonesia, which is probably one of the largest producers of nickel, because Russia's at war. We're not buying nickel. We can't get the supply there. That's being boycotted. And he said, I will buy half of your nation's nickel production. And they went, excuse me? He said, I want half of it. Let's get the contracts done. And so, I mean, he's just for his one plant, he's buying half of the largest producer's entire nickel production. That's just nickel. That's not silver. That's not gold. I mean, these little babies right here, right? 72 rare earths in there, 72
Yeah.
rare earths and metals. So he's going out to nations and buying production from them. So is the demand going to go down? If it goes down in the cars and the windmills and the other thing, the way it looks now is that AI is going to just gobble that, and the energy that is being produced is going to be another big thing. They're looking now at the what they call the microfission reactors in order to create electricity for these gigawatt plants. So the demand looks like it will invert from the current demand over to this new creation. I don't see it slowing down. I think there's still going to be a demand for any transducers of electricity at all.
Now, paint for me two questions for you. First, paint for me what you think your most bullish scenario is for gold and silver. And then I want you to follow that up, or start with, depending on which order you want to do this, what you think your bearish scenario is. And I'll start with my bearish scenario,
Sure.
coming out with devil's advocate. And I don't think this will happen, by the way, but let's say it did. The thing that to me is driving some of the loss in faith in the U.S. dollar, some of the loss in faith in U.S. Treasury. It's just the decisions that our federal government is making right now. But what if we had a sea change in Washington, which I understand would be very difficult, where we get a Javier Milei type person, a guy that just came into Argentina, that says
I've been watching that. It's been amazing.
we can't. It's amazing. He
analogy.
Collapsed inflation. He cut half the government
They were
bureaucracies.
at 50% inflation at the time, and at one point they went to 75. I was looking to buy some condos in some of the high rises there, as a matter of fact.
Yeah, and it's incredible. It's incredible. Like, literally, inflation's not gone, but it's in less than a year. And we're talking 6-7 months or so.
Yes.
This guy has made amazing changes down there. Now, I think that the bureaucracies and the institutions are too far entrenched. And as we talked with the Hunt brothers, institutions and bureaucracies are always going to defend the institutions and bureaucracies. So I don't know where we would get somebody in the United States like that. But let's say something like that did occur. All of a sudden, now we're in a massive deflationary environment, because you don't have the situation where the federal government is overspending. The Fed's got to step in some scenario. It's all, you look at equities, it's followed the money supply. You look at the metals, it's followed the money supply. Not always in the same years, but over time, it's done that. And that's my bearish scenario. My bullish scenario is that people keep doing what they're doing. And so then I flip it back to you in terms of what is your bullish and bearish scenario.
Yeah, well, fingers crossed we don't keep doing what we're doing, because we can't.
We can. I got kids. It infuriates me.
I mean, that's just the reality is that this system can't keep doing what it's doing. We can't throw $1 trillion here, 15 billion there. Someone has to pay for it. There has to be work and jobs. There has to be a reality here at some point. So I agree with you on that. Let's not even go there. And the bare bones reality is that if things do temper themselves, let's say, and we start to get into a scenario where we see jobs coming in, jobs that aren't just for the government, jobs that are actually doing things and producing things and creating things, and it gets better here. And how will that affect? First off, we got 3 wars pending right now that we got to get cleaned up. So let's say the wars go away and the geopolitical risk goes away. Gold's going down.
Yep.
That's not even a question. And where is the floor? I have no idea. None. All right.
Yep.
I have to be pragmatic. I would love to see it happen. Okay. I would love to see this nation get stronger, things get cleaned up, people get good jobs, things start going along. I don't care if gold goes down $1,000. I'm all for it. All right. As far as silver goes, obviously it will follow. It was the weak sister before, but not so much anymore. And it isn't as bifurcated as it used to be between a precious metal collection versus industrial usage. So let's just say that if things temper themselves and all of a sudden we come in and we say, oh, by the way, there's going to be no more tax on newly created, newly instrumented chips, things of this nature. We're not going to tax them anymore. Go crazy, make as many as you can. It's great because we'll make money on the sales of these instruments and that kind of thing. So what will happen is silver will fall, but not as precipitously as gold. Gold will get hit pretty hard. So if we go from just putting a Band-Aid on something to actually suturing it up and getting this thing fixed, obviously we're going to go down.
Yep.
And the question is where, and the question is when. We don't have the election for 7 months. A lot of damage, as we've seen, can be done in 7 months.
Yeah.
And here's the other thing. All of the chips that we use in everything, right? Like almost, I think the number the last time I looked was almost 90%. They're made in Taiwan. So, and oh, by the way, Putin was just in North Korea, which is where we get the majority of our rare earths. So if Putin's got his arm around the rare earths and China grabs up the production of all of our wafers, if you will, what happens? Who's going to start producing those overnight with right now the average mine from drilling a hole to getting into production to produce silver, copper, gold, things of that nature. The paperwork is 7 years. We're going to be in a whole bunch of trouble, and it isn't going to be repaired easily. So, I'm with you. I hope that your worst case scenario for it going higher happens. I really do. But does it look like it's going to happen? It's going to take time to repair all the damage that's been done. It's going to take time to rescind all of those laws that were passed. I mean, honestly, something that I think you should really cover and look into for your show is the Chevron doctrine. Are you familiar with that?
Not at all.
Look it up. Take a look at it. The Chevron doctrine was created for a body who could just pass laws that didn't need to go to Congress or Senate. In other words, the idea was, well, why should we go to Congress and pass a bill? It takes a year or two. Well, for smaller things, we'll get a Chevron meeting done, and we'll have this done quickly, and they'll pass the law and it'll be fine. And this fence
sounds constitutional.
Well, it was an exemption to the Constitution,
of course,
but it was for the reason that the constitutional structure does take time.
Right.
And if you've got a guy who just threw up a fence across this plot of land, and now this guy can't go water his cattle, and you can go to the members of the committee and say, hey, guys, and they go, yeah, okay, that's got to come down. Fine,
Okay.
we'll write you up. All right. In the last 4 years, I understand that they have passed 18,000 regulations. All of those have to be stripped. They have to be taken. We don't need the regulations, we just don't. So they just this Friday told us the Chevron board that they're dissolved. They said, we no longer recognize you at all anymore. Goodbye. See you later.
Was that the Supreme Court deal that came out Friday?
Yep.
Okay.
Yeah.
Bill, I want to look smart there, but Bill's actually texting me on the side. He goes, SCOTUS just dumped it. So thank you, Bill. Well, let me ask you this, Pete. So we talked a lot. Obviously, I know you've got some very large customers around the world, but I want to talk a little bit. We'll end with this, talking about AU Secure, your company.
Oh,
Um,
thank you.
can you, let's say there's somebody out there that wants to know more. How do they reach you and who can you help?
Well, first time gold buyers, it's kind of scary. The thing that you want is, I always tell people there's a few rules. You want somebody who's been in business 5 or 10 years. We have, with gold up at these levels, we have these kiosks and companies popping up like mushrooms after a rainstorm. It's just like, who are these people? And are you going to get your product? AU Secure's been around a long time. As you know, I was one of the leaders over at Zaner for many, many years, and before that at INTLFC Stone, which is now StoneX, and which was the 39th or 49th biggest company in the world. And my partner of 20 years, Tommy Garland, super guy, man. He passed away. And at the same time, my wife developed severe cancer, and then she passed away. And I spent about a year and a half caring for her, and Tommy was carrying the load, and I would, take care of my wife and then get into the office. And we were running a platform called Tornado, which was the only independent exchange, if you will, for hedging. And so when Tommy passed away and my wife passed away, I was tired. I said, that's it. I talked to Matt Zaner, great guy. And I said, I'm leaving, this is it for me. And he said, fine, no problem whatsoever, Pete. And so I took a year off and did a bunch of stuff that I needed to do. And Hadi Saeed, who runs AU Secure, who I met 15, 16 years ago when I had all the gold machines in the airport. People were going to get on the plane. They would take the cash that they had from whatever country they were in. They'd feed it in there and they'd take a piece of gold, drop it in their pocket. And we were killing it. And somebody, Hadi called me and says, hey, I got something that you want to see over here. So I went over to meet him, and he had this ocular recognition system that we could put on the machines that people could go up, would scan their eye, and it would go right into their account, or it would help them open an account. And he was miles ahead of everybody, and we really hit it off. And over the years, we became friends. And he's known me for a long time. And he called me up and he said, Pete, look, he goes, your wife's passed, all three of your kids are out of college. He goes, he says, you got too much experience. He goes, come on over, put the big shoes on, and be my chairman. Take over the company. He says, there's some stuff I need to do offshore, and you're the only guy I know who could do it. And I said, you know what? I'm bored to death. I'm ready, So I went over to AU Secure, and we started adding on some offshore business, and then I started to see this need for retail people, all these phonies popping up, and there's really only 10 or 15 really solid companies that I know. I said, let's just go and do some retail stuff. And our site, AU Secure /Pete. I have my own page there with all the shows I've done, interviews like this, and that tell you how to buy gold, who to trust, where to be, what looks good at the moment. It's all there for you. And what we've been doing is we've been trying to gently break people into the idea that gold and silver are good assets to own and hold for a long period of time. And they can just drop it in our website. And now that we've really ramped it up, it's going real well. I'm kind of surprised.
Awesome. So they can find you online. Is there a phone number?
312-605-2571. And I will be, that'll either be me or someone else. And if you ask for me, I'll try to get on the phone and actually talk to you. I want to make sure that you get off to the first step. And also, a lot of people have portfolios. They don't know how to move around in it. I will not give you stock advice, but as far as commodities and metals and things of that nature, I'm happy to support you.
Pete, this is a lot of fun, man. I enjoy all these conversations, but I really had a good time with this one.
I
So
hope we're
thank you.
not out of time. Are we out of time?
We're out of time
Man,
here.
we had a
But
lot to cover.
there might be a part two.
I got to
There's like
come
five
back
other things I want
because,
to talk to you about. So we might have to
yeah,
come back for a second one if you're up for it.
Yeah, I'm up for it because there's a lot of things going on in the base metals, which are still really inexpensive, that I'd like to tune your viewers into.
I'd love to learn more about that. So let's definitely
Yeah.
get that set up. That'd be fun.
Right. All righty.
I support a part 2. Okay. I support a part 2 and a part 3, as a matter of fact. I'm sitting here listening to the conversation, completely forgetting to send Brent time cues. Okay. I'm like, oh, yeah, yeah.
You bailed me out on on that Chevron thing, though. You know?
Listen,
Yeah.
listen. You know the weird piece of trivia about that, and you can go
Yeah.
look it up. I won't get into it. Neil Gorsuch on the Supreme Court was part of the group that overturned the Chevron doctrine.
Okay.
His mom was essential in developing the Chevron doctrine.
Oh, isn't that
Interesting.
interesting?
Now I was
Eh,
listening to some news this morning. I got like a 15-minute kind of recap that I do, and I was getting changed to come in here, and they touched on that, but I didn't realize that was exactly what we're talking about. But
Oh,
I
yeah,
appreciate the help on that.
Well,
No,
I just
no,
thought it
no.
was something that your viewers might, I think that our job is to educate the public.
100%.
Yeah.
Agree,
and so
agree.
if
And
I
I,
can-
you know, and I'm sitting here thinking, we talk all the time about stocks and bonds. Rarely, thank you, Brent, do you have a conversation about commodities in a broader sense, not just gold, but commodities in a broader sense.
Yeah.
And you know, and Pete, you have piqued my interest. So now I'm going to have to go off and delve into commodities because I've been uncomfortable in my stock positions for a while, given all of the craziness that is going on. So yeah, no, it's something I definitely, uh, you know, have an interest in exploring a little more deeply. And Brent, speaking of which, if anybody who's listening to this thinks maybe I ought to go to Brent and explore this more with him, how do they get a hold of you? How do they reach you?
Yeah, you can find us on obviously the podcast is up on pretty much all the platforms now. Our website is tws.finance. Got a YouTube channel, Smart Money Simplified Podcast. And if you go to smartmoneysimplified.com, it'll also take you to our website.
Well,
Last thing. I'm
if
sorry,
you-
go ahead, Pete.
if you get yourself a big following here, and all of a sudden I'm selling metal for you, and I mean, we'll just put a link up on your site and make you a distributor if you want.
Well,
We
that'd be something we could definitely discuss down the road because I believe that there's a place for
Yeah.
the physical commodities, no question about it.
Yeah, it's time. It's just time right now. And next 2 or 3 years, to me, they look kind of scary. There's no question about it. And Brexit comes in as strong as it is. Gold demand globally is going to increase. And you'll be able to walk into any bank in the EU and put a Silver Eagle or Canadian Maple Leaf down, and they'll give you whatever currency
The
they have,
equivalent. Sure.
Yeah.
Yeah. But final thing would be the phone number 602-255-0555. But I love to have these conversations because they are outside of for sure my area of expertise, which is why we bring guys like Pete in to discuss them. But hopefully everyone enjoyed this show because I sure did.
I thoroughly enjoyed it. And for those of you who are listening to this podcast and who are not yet subscribers, why not?
Yep.
And it's easy to fix. Just hit the follow or subscribe button right there in front of you. That way you will be notified whenever Brett drops a new episode of the podcast. It's really that simple. If you like it, by the way, I would suggest review it. Tell people about it. Get the word out. A little word of mouth promotion is a very welcome tool, and we would appreciate it very much. Until next time, I'm Bill Tucker on behalf of Brent and everybody at TWS. Thank you for taking the time to listen today. And I want to remind you that you can go out today and make today a great day or not. It's a choice. Thanks so much for listening.